Hello and welcome to American Mogul. Today we are going to talk about GameStop's blast radius. Yeah. Why do you think they are trying to stop the purchase of GameStop? GameStop, believe it or not, is in 62 different ETFs. And those ETFs are in hundreds of other financial instruments. Yeah. Now, understand how ETFs work. They take a basket of stocks, yeah. Sometimes all the stocks in a certain index, and depending on their market cap, they adjust. Yeah, and they have to adjust on a daily basis, sometimes a couple days a week, but pretty much. Yeah. So imagine what has happened. GameStop went from a market cap of a few $1 billion to over 20 billion. It's waiting in these ETFs. It's not the retail buyers who are stoking this. Yeah. Of course, they are part of the issue, but ETF rebalancing is what's causing all the buying. And of course, for them to rebalance, you got to put halt to everybody else's speculation. They're in a situation where they are selling other companies. Look at what happened in the stock market. Why did stock market go down 4% last week, approximately? Yeah, and GameStop went through the roof. Yeah. Well, these ETFs and other financial instruments had to rebalance. So they had to sell other companies to buy more of GameStop to balance by market cap. But what is happening? GameStop, which I like the company, I grew up with the company, it is nostalgic to me. However, it's in a feedback loop, yeah? Whatever you think, the Reddit, the Robinhood, the whoever you think started this was fueled by larger investment institutions or investors. However, there's always knock-on effects, yeah? As GameStop went up in market value, its percentage in ETF weighting increased. This is simple. Market value go up, it become bigger portion of ETF. There's 62 ETFs that have to buy the stock to rebalance. Now, there are hundreds of other financial institutions that as part, or instruments, that have these ETFs in their funds. So now they have to rebalance and buy GameStop. So it is a frenzy that is feeding on itself. But it is a negative feedback loop, yeah? If you made money, God bless you, I'm happy for you, yeah? But the blast radius, when GameStop goes nuclear, is going to drag the market down. It's going to be a crash of biblical proportion from one small company. And there are a lot of effects, emotional, mental things that are going to happen to investors as they see this market that is in bubble territory, yeah, get vaporized by a little brick and mortar company that was nearly basically hanging on by the skin of their chinny chin, yeah. To me, it is astounding how no one is scared out their mind. Me personally, I've gone short everything. Everything. But with about a little bit less than 10% of my net worth. You know? Because the systemic risk to the entire marketplace, and it will only get more dangerous as GameStop price goes up. The more it goes up, more its market value becomes, the more these ETFs have to rebalance. And come on, between you and I, in my opinion, GameStop is at best, a $5 stock. At best. If they reinvent themselves, they might be able to move higher. And if they, which it would be fiduciary irresponsible for them not to issue new shares at these prices, yeah, to raise capital, diluting it. And I think that is going to be announced in the next couple days, couple weeks, yeah. However, the mania has driven this one little brick and mortar retail to becoming the pin that pricks the stock market bubble. The chaos, the destruction. This is not, GameStop had become a nuclear device that when it goes off, the blast radius will affect the entire stock market. As it unwinds, there's going to be devastation. How do you protect yourself? Well, you do what you want. Yeah. I took a little bit less than 10% of my investable portfolio and put in S&P, Russell, NASDAQ. I don't want to touch the Dow. And the thing with the Dow is GameStop is not in there. But all the other ones, yeah, are in some way interconnected, interwoven. The stock market is not about one stock. Now with passive investing, you are investing everything. And passive investment is at least 70% of the market. And if you think about it, GameStop with the interconnectivity, yeah, is in about 70% of the market. People see this, yeah. Not everyone, but major investment firms, they are trying to stop it. Yeah. Because if market dropped by 30%, we are talking about tens of trillions of dollars lost worldwide. Now, GameStop may have been a rallying cry to stick it to the man, yeah? Because we all know the markets are rigged, they're manipulated. We get a little piece of the pie. But now it's morphed into something much bigger, something much more dangerous. You need to be careful and protect yourself. This is going to crash the market when that stock, GameStop, goes off. The blast radius is going to destroy everything in its wake. Yeah? So, how do you protect yourself? My opinion, yeah? Go into cash as much as possible. Get out, get out, get out, get out. If you are going, once you're 100% cash, listen, 100% cash. Take 5 to 10% of that cash and write at least 6-month dated or longer puts on S&P, Russell, NASDAQ. Yeah? Because who knows how long it's going to take for this craziness to play itself out. But it's going to play out. Do what you want. Yeah? Think for yourself. But understand the shock waves that are going to spread out from the crash, which is going to happen when GameStop stops going up. All you're going to see in the next week, 2, maybe a month, is stock market going down. And then why it will go down is as this frenzy picks up, not just with GameStop, but you've seen it in AMC, BlackBerry. All these are all parts of ETFs, yeah. And I would say, my personal opinion, 80% marketplace is ETFs, yeah? As they have to rebalance, these nearly bankrupt companies are becoming bigger and bigger and bigger parts of those portfolios. When the bubble bursts, oh Lord, I can't even begin to tell you. I said before GameStop was zebra, swan. No. It is a black swan. No one could see this coming, and no one is talking about the destruction it will bring when it reverts back to fair market value. On the way up, it's sucking out the money from good companies in the rebalancing that these ETFs, they have mandates, yeah? So all these near bankruptcy companies that are going up exponentially are becoming an exponential larger portion of these ETFs. These ETFs are parts of hundreds of other financial instruments. Yeah? Now, when this frenzy ends, the market will already be down, I would say, over 10%. Yeah. As all this rebalancing happens. People will get scared. Yeah. And one thing that you have a stock, you bought it for $50, it went to 100, yeah, and it goes to 80, you're still up $30, yeah. But when that bubble bursts, when that nuclear device goes off and the blast happens, how you gonna feel when that stock is $40 and now you're down and market going down? Your wavos go up so far into you, you can taste your own pee-pee. Yeah? Come on. Be serious. This is a major problem. And right now behind the scenes, whenever you see major investment brokerages curtailing or cutting off trade in certain stocks, it's because they see it coming. And now put options, bets against the market, are going through the roof. Who's writing the put options? If all the Robin Hoodies and the Reddit bros and all those people are pumping stocks and buying call options, who the heck is buying put options? This cannot maintain this level. And like I said, GameStop, once it goes off, the blast radius is going to take out everybody in many different ways. So be careful. Think for yourself. And may God bless you and keep you safe. Thank you. Bye-bye.